Senate candidate Elizabeth Warren is demanding Congress bring back FDR's Glass-Steagall Act on the heels of J.P. Morgan's $2 billion loss. Now, the act kept commercial banks out of the investing business, and critics say repealing the act paved the way for the government's bailouts of too-big-to-fail banks. Time to bring out our panel. Ryan Frazier is the managing director for Frazier Global Strategies in Denver. Hadley Heath is a senior policy analyst at the Independent Women's Forum in D.C. And Robert Gray joins me from the Fox Business Newsroom. Ryan, let's start with you.
You know, she has zero business experience, Jerry. It makes me wonder whether she subscribes to the worldview that if businesses have big losses, then they're underregulated, or if businesses have big gains, then they must be undertaxed. I would say to Ms. Warren, let's, before we go adding back Glass-Steagall, let's figure out why all the other regulations haven't worked.
All right, Robert, what do you say? You cover this stuff.
Yeah, absolutely. You know, and she's hardly alone. This is a political issue, obviously a political year, but you do have some investors, analysts out there who think it would not be a terrible idea to reinstitute at least some of it. But absolutely right. There is a thicket of regulators out there, and it's sometimes unclear who is actually leading the regulation. So, you know, a number of folks I'm talking to don't see the point in adding yet again more layers to that. And how about clearing up the regulation and trying to implement what we have on the books now?
Hadley.
Right. I think this is an example of a politician using a bad news story. J.P. Morgan Chase just lost $2 billion to say, hey, listen, I've got the answer. I'll make it so this never happens again. But you think J.P. Morgan Chase, without extra regulations, isn't going to do everything in their power to keep this from happening again? They just lost $2 billion. Their shares are tanking. And furthermore, people are going to be questioning whether or not they want to bank with this bank in the future. I think as long as we let decision makers bear the consequences of their decisions, that's the best way to encourage prudent decision making.
On the other hand, boy, I just hate to think that we might have to bail out another one of these banks. That would be horrible, obviously. Well, let's talk about a good news story, financial story today. Average rates for 15 and 30-year mortgages falling to record levels for the third straight week. The 30-year dropping to 3.79%, which is the lowest rate in history. Robert, can you say opportunity?
Fantastic. I should go out and refi right now. I mean, these are great rates out there. The question is, are people willing to take on more debt? Are they willing to go through the, again, a whole thicket of papers and regulations to get it done? And can they? Are the banks going to be willing to lend out to that? It still remains to be the question. But the real underlying question here, Jerry, is just how much demand is there out there? People are, have been tightening the purse strings and may, still feel like the prices are going to continue to fall a little bit. So why step in now? So you can have the low rates there. It's fantastic for those who can get in. They should absolutely take advantage of it. But you cannot force people to go and take the loans.
Well, Ryan, Robert makes a good point. A lot of these lenders are not doing refis for folks. So what do you make of this?
You know, I think it's a good time to buy. As you guys said earlier, Jerry, a home buying is more affordable for those that qualify. And that's another point you have to underscore, those that qualify. The reason we got into a lot of trouble earlier with mortgages was a lot of folks who weren't qualified were getting loans and getting over their head. And so other than that issue, hey, it's a fixed rate, so it's more predictable. I think that's great. And hopefully these low interest rates will also encourage more home builders to re-enter the market and give them the confidence they need.
Well, we've seen a little bit of that. Hadley, what do you say?
Right, they're going to have to start giving houses away. With rates this low, it doesn't matter how low the rate is if you can't get the loan. It's like everyone's been saying, but you can't get a loan if you can't get a job, or if you have 6 figures in personal or student loan debt, or if you can't come up with the money. Most banks are asking for a 20% down payment on a $200,000 house. That's $40,000, so that's going to be difficult for some folks.
Difficult, and if you're refinancing a home, look, you're probably facing a situation where you're underwater. People really struggling to take advantage of these low rates now. Well, let's talk about California. It's not a good news story, but at least it's fun to talk about. The state of California facing financial ruin, and Governor Jerry Brown earlier today taking offense to a parallel to the financial situation in Europe. Listen to this.
Some tired country of Europe, we're a buoyant, dynamic society that will both discipline itself on a daily basis, but it will, on the long term, plant the seeds of future growth.
So at the top of that, you might not have heard it, he said, we're not some backwater European country. Hadley, how do you respond to this?
Right. Well, what's interesting is the voters of California are actually going to have an opportunity in a referendum vote to decide if they want to raise some taxes on high-income earners or if they want to face some harsher cuts, because there's going to either be a combination of cuts and tax increases or just harsher cuts. And I'll be interested to see if they raise those higher taxes and take more money out of the private sector, because that's not going to encourage growth in California.
Absolutely not. Ryan, to you, later on in the interview, he said, what a cradle of innovation and intelligence California was. Facebook's an example of that. Well, not really, because Zuckerberg was from Westchester County, right up the road here in New York. What do you think about that?
I hope things do get better for California. I have to say, though, I think things are probably going to get much worse before they get any better.
Yeah.
A $16 billion budget deficit and a governor who wants to increase taxes on Californians, and all he's going to ultimately do is probably prolong the economic and fiscal woes of that state.
Well, they've got a long way to go, that's for sure. Robert, Hadley, and Ryan, thanks for helping us out tonight. We have to cut it short. Robert, sorry about that. Appreciate all of you. Thank you so much.